Hey guys, Brian Horton again with BK Trading Academy. So we're going to be talking about some building blocks that you can use to have a profitable trading strategy. Now, some of you guys may be looking at this saying, he's not going to say anything that I haven't heard before already. Now, that's the type of mentality that will keep you from being a profitable trader. I guarantee you guys, if you can follow this particular strategy, if you can implement these things, you will become a profitable trader. Now, who doesn't want to become a profitable trader? It is recession proof. And what I mean by that is that if the economy tank, you can sell and still profit. If the economy is doing good, you can buy and still profit. It doesn't matter if it's the stock market or the Forex market. You can profit either way. You don't have to deal with products. You don't have to deal with customers. You don't have to deal with inventory. You don't have to deal with anything like that. So trading, in my opinion, is the best way to make money in 2023. So guys, take a pen, a pad, take notes on your computer, however you want to do it, and we'll go ahead and deep dive into it. If you haven't already, like this video. I appreciate you guys for doing that, and hit the subscribe button. Don't forget to hit the notification bell, guys, because you don't want to miss content like this. So let's go ahead and get right into it.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
All right, guys, so number one is the environment of the market. You want to see what the market is doing. 9 times out of 10, traders who come to us have no clue about what I'm saying here. So what do I mean by that? Is the market ranging or is it trending? That's a question that you should ask yourself, because this will help you to identify when to get in and how to trade. So if the market is trending, you want to use things like moving averages, trend lines, and fib retracement tools. Now, these are things that can actually help you identify when to enter and how to enter. For example, if we're in an uptrend, we always want to buy at support because there are more pushes to the upside than there are pullbacks to the downside. Now, it's even okay to use indicators that use pivot points or that can identify pivots within the market. So what I mean by that is something like an RSI, a Bollinger Band, or even oscillators. So what is an oscillator? An oscillator is an indicator that will help you determine when the market is overbought or oversold. So think about it. If a market is trending, you want to identify when the pullback is there so that you can buy at that support zone in an uptrend, right? So if you use an RSI, you can see when the market is overbought. You want to wait for that RSI to come down to your preference, whether if it's a 30 or a 20 level, and then buy right off of that support. You don't want to use indicators alone, so you want to be able to understand price action. All right, so my second point is inflection points. So inflection points are identifying key levels. Key levels can be support and resistance. It can also be supply and demand. Now, these are highly important because these are the areas where big banks trade at. Believe it or not, banks trade at these supply and demand levels because they're trading for money. They're the ones who actually move the market. We as retail traders do not move the market. We're trading maybe a few hundred, maybe a few $1,000s. These banks and institutions are trading millions and millions of dollars. So those candles that you see moving are from the banks, and they know where they want to buy and when they want to sell. So if you can identify the supply and demand, the support and resistance zone, you are on your way to having a profitable trading plan. All right, guys, so that leads me to number 3, momentum. Now, momentum is highly important as a trader. You want to find pairs that have some great volatility, okay? Now, the volatility also depends on the session that you're trading. So if you're trading GBP AUD like you see here, you want to typically trade this during the London session because we are trading GBP as the base. So one way to determine the momentum of a trade is to simply draw a trend line. You know that you are in a trending market if you can draw a trend line from A to Z. Now, one thing you want to do is see how steep your trend line is. The steeper the trend line in a vertical way has the most momentum or volatility. I'm going to show you a chart that doesn't have that much momentum, such as CAD Chef. Now look at this. CAD Chef, we can see the volatility. I can draw a trend line from here to here. This is from March to May, and look how wide this is. It's not as direct. It is not as vertical as the other trade. Let's go back to that other pair, GBP AUD. And we looked at from March to May. Let's do the exact same thing from March to May. So here's March right here. I can grab my trend line to May, which was just a couple days ago. And look how steep this is as far as being vertical. So this is all a part of momentum. The steeper your trend line is, the more volatile it is, and the more pips that you can rack up if you have a solid trading plan. So this leads me to my next one, which is timing. Timing is everything when it comes to being a successful trader and having a profitable trading plan. So timing is everything. You don't necessarily have to trade a volatile market if you don't want to. If you're comfortable trading a market that is pretty slow, especially for beginners, that is completely fine. So you want to know when to trade. So the best time to trade, if you don't like a lot of volatility or if you're a beginner, is when the market overlaps. So if you're looking at the United States dollar versus the Great Britain pound, then you want to wait for the New York session to overlap. And then typically you will see price begin to range. And as price range, you can get in at support and then sell at resistance. Get in at support, sell at resistance. And you will see that bouncing back and forth in which you can grab 15 to 20 pips easily each time as price moves up and down. This is great for beginner traders. This is great for those who are not profitable. You just want to develop a profitable strategy. Now, this leads me to my last one here is back testing. A lot of people don't back test. Back test simply means that you want to go back in time, implement a strategy, looking at how a pair moves, taking interest in that pair. When can you trade that pair if you're looking to trade it when it's more volatile or when it's less volatile? And you want to trade it as if it's your first time trading it. You want to see how that pair moves, when it moves best, in your personal opinion, and then just simply trading it. Back testing it and doing that at least 20 to 30 times will get you on the right track. And then finally, and this is a bonus, is journaling. Kenya and I are huge on journaling. And I must say that I was one who refused journaling. She's the one who is the most consistent, but we level each other out. And so that being said, guys, journaling so that you can look back and reflect on how your trades have played out. That is the most important. How can you know if a strategy is working if you haven't journaled it so that you can look back and reflect? Guys, that is it. This is very simple. I want you guys to take notes on this, keep this and save this to your YouTube playlist and watch this over and over again, because these are tips that has been tried and tested by myself as a professional trader and educator, and as Kenya as a professional trader and educator. And guys, trust us, we know what we're doing. We're profitable traders and we do this every single time. So again, guys, if this makes absolute sense to you, I want you to hit that like button, subscribe, comment below, and let me know if this helped you. Don't be afraid. This is a safe zone. Comment below and let me know if this has helped you. And then also, guys, if I missed something, let me know in the comment section as well, something that has helped you as well. Guys, that concludes this video. We will see you in the next video. And I hope this video has been a blessing to you guys. That is all that we're about in this channel, is to give you the best trading information that we can possibly do as professional traders. All right, guys. So you guys stay to the end, and I want to let you guys know a couple of things that are in the work right now. So Kenya and I are developing an account management program. We don't quite know when that's going to come out yet, but we're going to be managing your account. So if you're interested, if you're not a profitable trader, if you struggle, you will actually take the same trades that we take. We will trade it for you. You can have access to your account, and all we're doing is managing it for you. We're so confident and profitable in our trading strategy and our trading plans for the last few years that we're confident that we can actually trade for you. But we don't trade for anyone right now. That hasn't started yet. So if you get an email, if you get something on Telegram that's false, that is not us at all. You will only be able to find that information at bktradingacademy.com. Again, www.bktradingacademy.com. And we will let you know in an email when that comes out. So if you haven't subscribed to our email list, now's the time to do it. Check out all the information in the description below. We'll see you in the next video. Take care.